Good afternoon, everybody. Good afternoon. This is Hai from ICHAM. I'm Pham Hoang Hai, the Executive Director of the Italian Chamber of Commerce in Vietnam. And welcome back today again to the series of webinar organized by ICHAM and its partner. We are very glad to have such a numerous number of participants as always during all the webinars that we organize. And you know that during this COVID different time, we're trying to organize different webinar on different perspectives in order to provide to the company both working in Vietnam and for the foreign company that's trying to approach the Vietnamese market a better, more in detail view about how the business is going here in Vietnam. And today we talking about one of the, let's say, a very important and that getting a very high level of attention from the company that's operating in Vietnam, which is the stock exchange market. And we're talking specifically on about the law of security in 2019, which is single centralized Vietnam stock exchange market that have been implemented. And to have today with us, we have also very, let's say, very two important speakers. The first one is Federico Vasoli, which is a long-term member of ICHAM, international, very high, at a high level of international lawyer. He has been more than 10 years of experience working in Vietnam. Across industry, we have served many multinational company and also international company of the medium size to the business in Vietnam. He operates in Malta, in Singapore, in Italy, and also across in Vietnam. So we hope that, and he will also speak about the substantial legal change to the law of security. And we hope that with his experience as international lawyer will help you to have a better view and better understanding about how the thing is going on with this new law. And the second important speaker that we have today, well, I believe for those who are operating in Vietnam, there's no need further for introduction about him. Dominic Scriven, the executive and chairman of Dragon Capital, I'd say the most well-known, or maybe personally, I believe the most important key player in the stock exchange market in Vietnam. And Dominic will share with us about the impact of the legal change on the market and on the economy. So before we start, as usual, I would like to ask you kindly, please change your name in your full name and the company where you work in order to help us to better track back on all the participants. And please mute during the presentation of the speaker. If you have any question, please raise your question in the chat segment, and we are happy to together with the speaker to answer all of your questions in the Q&A part. And so right now I'll leave the floor to Federico. Federico, are you ready?
Yes, I am. Thank you very much, Hai, for your generous introduction. I'm very glad to be back at ICHAM, regardless of the fact that we're holding this webinar through Zoom. I was counting on the positive resolve of the Vietnamese government in tackling COVID-19 to be able to finally have a live one in person, but apparently the virus doesn't listen to my wishes. Anyway, it is truly an honor to be flanked by a legend in Vietnam like Dominic Scriven. So that makes me rather nervous in giving my small presentation. But as always, I'll try and be as concrete as possible. Lawyers tend to be a bit theoretical in their explanations. However, this new law on securities that was passed in 2019 has finally seen the light on the 1st of January 2021 and will roll out over the course of several years. So some of the changes that you mentioned, Hai, for instance, the fact that there will be one centralized stock exchange in Vietnam will occur apparently over the time of 2 years. It will happen in 2023 because everything has to be adjusted by then. So without further ado, allow me to share my screen so that you can see my presentation. It's very simple. I went to the core of the of the changes. Can you see my slides all right? Just give me a nod high if you can see the slides.
Yes.
Fantastic, thank you very much. I would also like to thank all the other supporting co-hosts. There are many, so thank you very much for that. This is just a small presentation about myself, but I don't want to be self-referential. What we do, again, it's a bit self-referential, but we have been particularly active recently, in recent years, in fintech, artificial intelligence, and augmented reality, which somehow have something in common with our traditional scopes of business, namely international contracts and foreign direct investments. Allow me to re-show a slide that I had already published with you on occasion of our seminar about the changes to the law on enterprises and the law on investments, which is the general context. I mentioned the virus. I mean, we cannot help but mentioning coronavirus all the time, unfortunately. And we have seen a change in attitude in the region, especially in large financial centers. And I'm thinking specifically about Singapore. Singapore was probably one of the best countries in tackling the pandemic, but unfortunately, recent days, recent weeks, it has implemented severe restrictions due to a spike in cases and due to pessimism vis-a-vis the efficacy of and effectiveness of the vaccines against the variants. A similar mood, albeit not as gloomy, is shared in other Asian countries. So that results, that translates in keeping the borders closed, which means that our great work, especially the Chamber's work, in promoting investments in Vietnam is somehow hampered by the current regulations that prevent foreigners from coming and evaluating concrete investments in what we call the real economy. So if you want to meet your partners, if you want to see a plot of land, if you want to evaluate products for real in Vietnam, that is generally quite difficult at the moment due to immigration restrictions. So I thought that on top of this topic being per se quite interesting, one of the possibilities that are offered to foreign investors is to invest in the stock market in Vietnam. Now, Vietnam has recorded, perhaps Dominic will talk about this later, but Vietnam has recorded a growth in GDP growth rate in 2020. Despite the coronavirus pandemic. It was one of the very few countries to record a growth. So regardless of these gloomy sentiments and regardless of the restrictions, Vietnam remains, and I personally believe it will remain for a long time to come, a very attractive destination for investments. So investing in the stock market could be one of the possible alternatives to direct investments that are somehow blocked due to the restrictions, as already mentioned, and also an alternative or an addition to the possibilities offered by, in the case of Europe, by the EVFTA, the Europe-Vietnam Free Trade Agreement. All this happens at a time of major legal reforms in Vietnam. So as always in my job, I would like to give a holistic view rather than being technical and give you boring numbers about what the minimum share capital of a company that wants to launch an IPO has to be and stuff like that. That is, the general context is that Vietnam in 2019 and 2020 has managed to reform various key pieces of legislation, such as the mentioned law on enterprises and law on investments, the labor regulations, immigration regulations, and the law on securities. So let's go into the details. Now, can you still see the slides, by the way? Okay. All right. So the first securities law of Vietnam was drafted in 2006, and it was complemented and amended by ancillary legislation several times through the years. The goal of the first law, to give you a bit of legal context, was to regulate the domestic issues of VND denominated securities. It did not cover the private placement of unlisted securities. it gave a definition of securities, and it regulated the establishment and functioning of securities companies and investment funds. It also set up the regulatory bodies that have a role to oversee the entire functioning of the securities market. And then the two final bullet points, decree number 60, which is quite famous in the industry, of 2015, and the subsequent reformed LOE and LOI, further addressed certain aspects that somehow have to do with securities. Now, let us jump straight into the notable changes with the new law 2019. First of all, the number. So here you have a reference if you want to Google it up, if you want to read the whole law. I will first go through the bullet points and then go more into details. The law has entered into effect on the 1st of January 2021, together with the other major legal changes that I had mentioned before. The idea is to introduce more stringent rules on public offers and in general to enhance the role, I'm jumping to point number 5, of auditors, consulting companies, and the state, and of the regulator. Basically fill some loopholes that existed under the old regime. There are clear rules on mandatory public offers that were open to interpretation. I keep on mentioning the law on enterprises and the law on investments, but there is a specific reason for that. The ERC, the Investment Registration Certificate, is now mandatory for securities companies in addition to the SSC licensing. Let's say that the rationale of the law is to provide more tighter rules to protect investors and stakeholders in general, including the state. So for instance, additional shares may only be offered when the business is profitable. There are new prohibited behaviors in security and stock market activities that have been introduced. And as already mentioned, this is the big news, the dual system of the Hanoi Stock Exchange and the Ho Chi Minh Stock Exchange have been replaced, well, will be replaced through time with the establishment of the Vietnam Stock Exchange that goes along with the establishment of the Vietnam Securities Depository and Clearing Corporation, which, point number 10, essentially abolishes the existence of the Securities Trading Center. So this is in essence the major changes in the law. Let me give you some numbers. Allow me to read something because, of course, I may not be able to remember all the details. But why is the new law so important in addition to what we just mentioned? So, definitions. There are new rules, new or better detailed definitions of who related persons are. Related persons now include in-laws, family members, security investment funds and companies which are part of a fund management company, and related persons specified in the law on enterprise. So again, the importance of the law on enterprise is pivotal. There is a better definition of professional securities investors, which is crucial when investments come from abroad. These investors are more broadly defined and include not only financial institutions, but also companies with paid up charter capital of at least 100 billion Vietnam dong, which is roughly 3-point-something million euros, if I'm not mistaken. Listed companies and organizations registered for trading, individuals having a securities practice license, and individuals holding securities portfolios with a value of at least 2 billion Vietnam dong, or having a taxable income in the previous year of at least 1 billion Vietnam dong. This is quite important because essentially it gives you the definition of a qualified investor. As I mentioned, the new law has a larger focus on tender offers, and essentially has tightened circumstances in which a tender offer must be made. There are tables that summarize when this is compulsory, and there are tables that identify those circumstances when individuals, organizations, and related persons are not required to make a tender offer when purchasing shares or fund certificates of a public company or a closed fund. That is the case, for instance, of inheritance or trusts or closed fund certificates or organizations and individuals who become owners of shares resulting from division, separation, consolidation, or merger of enterprises. Now, again, the LOE and the LOI become very important because the new laws that I have just mentioned regulate quite in depth the functioning of mergers and acquisitions. So again, as a result of merger and acquisition, the result of a merger and acquisition does not automatically trigger a mandatory public offer. There is, again, with the definitions, there are new criteria to determine what a public company is and how it has to be registered. So according to the new law, there are two alternatives for a joint stock company to register as a public company. This is the consequence of the fact that in the past, according to the old law, the 2010 one, a joint stock company with only 10 billion Viet Nam Dong paid up charter capital divided among at least 100 investors could register as a public company. The fact that the threshold was relatively low increased the number of public companies, but did not guarantee their quality. This is the reason why there are higher thresholds. Again, we go back to the principles. We don't need to remember all that, but the principle is that we want to, the legislator wants to protect the stakeholders and investors and the public in general. There are more specific conditions to make a public offering, as I have mentioned in the slide. They are quite long. There is a list of 9 conditions. So the contributor charter capital I mentioned before, the 10 billion or more Viet Nam Dong minimum paid up capital. Now, according to the new law, it is 30 billion Viet Nam Dong or more. Profitability during the preceding years has gone up from 1 to 2 years. The issuance and use of capital generated by the offering has not changed as a condition. And then there are several thresholds of voting shares, of major shareholders' commitments, etc. There is a requirement of criminal records, of clean criminal records for the issuer. There is a requirement, I mentioned that in the slide, that the consultancy by a securities company has to be given. Commitment of listing securities after the ending of the offering. So the issuer has a commitment and must have his shares listed or registered in the securities trading system after the end of the offering. So they cannot just launch the IPO and not follow through. It is mandatory to now open an escrow account to receive payments for the offer shares. This is something that the old law did not address explicitly. There are new regulations on listing and registration for trading securities. There are regulations on private placement by public companies. There are licensing requirements to set up and operate securities companies and fund management companies. And quite interesting for those of you that are listening to this webinar from abroad or that have companies abroad, there is room for foreign ownership in the securities market. So the old law was silent on foreign investors' activities and participations in the market, in the securities market. But following decrees and circulars, Decree 60 that I mentioned earlier, they allowed for these investments, of course. And the new law is clear on the requirements that have to be met by foreign investors. They have to adhere by the limits on ownership and comply with conditions to invest in the markets. For instance, if the company, according to the law on enterprises and the law on investments, is investing in condition sectors, we covered that in the previous event. There are no numerical limits on foreign ownership. Maybe I will address this point later, because I know it's quite it's a question that is frequently asked. But essentially, there is no clear-cut limit on the percentage of shares that can be owned by a foreign investor in Vietnam. That depends on the treaties and on the individual cases. So to be quite general. So This is a brief overview of the changes in the legal framework. I will not take more time from Dominic and from the public if they want to ask any question. And I hope I gave you a brief overview of what the rationale behind these changes is, because that is the outtake of this series of seminars. What is the reason behind these changes? And then we go and pinpoint the single changes. Thank you very much.
Thank you, Federico, for your presentation. Before I leave the floor to Dominic, I know that many companies in Vietnam is working in Vietnam already know who is Dominic, but for those who's, let's say, participating from abroad, maybe he's not I'd like to give you more info about him. Him is the most important thing is Dominic is among the pioneer of the stock exchange market in Vietnam, and he started to work with business in Vietnam in 1991 in Hanoi, and in 1994 he founded the Dragon Capital, and there start the, let's say, all the things. So Dominic, are you ready?
Hey guys, yes, sorry. I am technically way above my promoted position. So I'm asking for a little bit of help for dear Kwok to get something, but I hope you can hear me. Hi, can you?
Yeah, we can. Take your time.
Yeah. Huh. Bear with me 1 second. Okay, so I think you can see the front of this, can you? What's on my screen?
Yes.
Hi? Yeah, great. Okay, good. Thanks very much. Thanks, folks. Hello, afternoon, everyone. I'm Dominic, and thank you for your kind words. Hi. And Federico, also your kind words. And thank you, co-sponsors, for this opportunity to appear. I won't say much about myself and my company because it's all behind me on the board. But to build out on Federico's comments, maybe I can share a few thoughts about how Dragon is seeing Vietnam at the moment in this year, 2021. And as you can see, our thoughts are titled Post-Pandemic Resurgence. The broad sum of which is that nobody's had a good COVID at all, but some of Vietnam's particular strengths have been emphasized and revealed to the world over the last year or so. And indeed, one of those is what was possibly the highest growth rate globally last year, although that's nothing to boast about. We've got after some loose steps, a fairly pronounced program coming into play to pick up the level of economic growth. And back on the markets, they have performed well. The Vietnamese stock market has performed well, like most markets in the world. And it looks reasonably fairly valued on an ongoing basis. And if we look at the risks, these are mostly outside Vietnam rather than inside Vietnam. I shall whip through the bit about Dragon. So, one of the challenges in talking about Vietnam is how to build an interesting narrative. And the fact is that the government, its policies, its policymakers, its administrators have generally made so much of the Vietnamese economic story rather predictable that it becomes difficult to continue finding new and interesting things to say. On the right of the screen here, items 1, 2, and 3 are what you would hear from pretty much any commentator on what's going on in the Vietnamese economy over the last 1, 2, or even 3 decades, actually. So stable growth, driven by a very export-oriented open economy, leading to very strong, rapid middle-class formation. We've got 2 new factors coming into play this year. One is really for the first time ever in modern Vietnamese history, an era of genuinely low interest rates. And secondly, a renewed and we think quite persuasive commitment to building up infrastructure. So we have a look at those. I won't talk much about COVID because it's quite distressing, the uncertainty with which patterns change every day, other than to say that we can see from this chart here, we're expecting flights to begin back to Vietnam without quarantine sometime in the early part of next year. If we look at those drivers, I think everyone's familiar with these charts here. Rapid economic growth and some recovery this year. We think maybe Vietnam might be heading up to 6 or 7% again this year, driven by FDI flows that just don't stop. Rapid growth, strong, stable FX position, reserves at a record high, driven by the current account surplus, of course, and a stable currency. Here's the other aspect of the stability, is the way that Vietnam has delivered these political cycles. We are, of course, just beginning a new political cycle following the most recent party congress. And if you look at the various messages that we've identified coming out in the past, the previous 2016, 2020 was really all about reforming the state sector, public spending, SOEs. Whereas now, and I think this is true in the markets, we see that the key is actually the growth of the private sector, the ability of the private sector to contribute to the machine of the economy, to link up with the foreign sector. And of course, that's important. This is a second factor here. The growth in industrial park rentals should make it abundantly clear that Vietnam is well into the stride of an industrializing nation. And when people talk about China and Vietnam and this, that, and the other, we should remember that the key driver for China's industrialization was not the whole of China. It was, in fact, Guangdong province, which itself is not much more than the size of Vietnam. So like and like. And not just quantity, but quality. This is a chart that shows the differing contributions from different kinds of export with the implicit value add increase in the green electronics and phone segment. And of course, a rising share of global exports. This is a very good example of my comment about how difficult it is to find new things to say about the Vietnamese story, because there is a great deal of predictability about what the government has achieved. All of us know the story about the middle class formation, of course. But I think here in Dragon, we've possibly could be accused of focusing very much on the 8 million to 32 million increase over the last 10 years. That's where our vision has been, and we rather overlooked the fact that on a number of estimates, the middle class is likely to grow close to $70 million over the course of this decade, and that's, of course, using a definition of GDP per capita from the World Bank. So on to the new factors. Those of us who live and work in Vietnam are used to relatively high interest rates in Vietnam. In fact, I think in the time that Dragon Capital has been around, there's only been negative real interest rates in 1 year or possibly 2 years out of the 25 that we've been working. And that is a credit to government commitment to build faith in the domestic currency and the management of the financial system. In the last year, though, we have seen very pronounced attempts by government to reduce, by the central bank, to reduce interest rates, reduce the cost of borrowing, partly because inflation is low, partly because of in real interest rates being structurally higher than in most other countries, and partly as an attempt to stimulate the economy. So low rates, of course, are a major issue pushing people towards the stock market. We'll come on to that in a minute. And the second of the news stories is infrastructure. Those of us who live here will know that it is, in many senses, similar to living in a construction site. It's not always visible from overseas. Our view is that this time inflation, the commitment to infrastructure spending is a very serious one. We have plenty of ceiling to borrow in fiscal terms. Interest rates are lower, deficits are lower, and external debt is not a matter of concern, unlike many emerging markets. And here are some of the projects that we're beginning to see mapped out with completion later in this decade. So to sum up our brief views on where the economy should be for this year, no surprises. I think we can move on to looking at the stock market. So here's the last 5 years. So we had a very strong run. 2016 up to 2018, it peaked. That was a certain element of over exuberance in the early part of 2018, as some of us may remember. We then went back into a correction, a consolidation phase, and then in the last year have recovered from those low levels of panic 15 months away from now. So if you look at what's going on in the corporate sector, we've got their earnings per share growth, sales growth, earnings before interest and tax growth, net profit after tax growth. Look at those numbers. They're all more or less showing strong recovery. And of course, we're seeing that everywhere else in the world. Low levels of debt equity ratios, price to book valuations reasonable, and a recovery in returns on equity. And of course, the price earnings ratio is lower than it's been for a while. If you look at Vietnam, when compared with other nations, this is the right part of the quadrant to be. Higher earnings per share growth and lower price earnings ratios. Bottom right is where you want to be, alongside Malaysia. In terms of what's been going on in the last 12 months, foreign investors have been withdrawing, broadly speaking, from the Vietnamese market. That's not unreasonable. I mean, despite the overall optimistic outlook for Vietnam, the problems of COVID, the perception of risk, almost invariably leads to people taking their cash and running back home. That is a response to stressed circumstances. So we're not necessarily that concerned about foreign withdrawals, although that may have begun to turn just in the last month or two. What really has been significant, though, is the pickup of local investors. Here we see the increase in new trading accounts opened with securities companies. That's a very, very dramatic increase. And indeed, I think the figure just out from April was 130,000, so a record number of new accounts being opened. Of course, many of us will know that this is happening around the world, and there are two views. One view is that because of low interest rates, because people are bored and sitting at home, and because of technology, which allows you to trade comfortably from your sofa, and because of eKYC, so you no longer have to go around with bits of paper and transport yourself around securities companies' physical offices, that it's become a great deal easier. And people are worried that some of these new investors are taking risks that they are not well prepared for. That's certainly one view. Another view is, though, that, and this was borne out in the US markets earlier this year, that these new investors are a new element, and they're not stupid at all, and they have their own way of investing, and they're teaching some lessons to some of the old hands. So there are two views about it, but in the case of Vietnam, the point that we would make is that this is Vietnam is actually slightly behind where neighboring countries like Korea, like Taiwan, like Thailand, like India were at a similar stage of development. So if we go back to the 1980s, 1990s in Taiwan and Korea, the percentage of the population participating in markets was actually higher in proportionate terms than it is in Vietnam now. So you have a strong argument to say that Vietnam is catching up with where it should be, and this doesn't look at all out of the ordinary when you look at historical comparisons elsewhere. Of course, most foreign investors are still calling Vietnam a frontier market. Federico touched on some of the aspects of the law which have moved ahead, but some of the aspects which similarly are holding Vietnam back from being an emerging market. This slide seeks to show that if you look at market capitalization in dollar terms, or if you look at turnover, you can see that we can see that Vietnam is already well ahead of a good number of already nominated emerging markets, and indeed quite a lot of foreign investors may be treating Vietnam as an emerging market, even though it is not yet an emerging market. This is probably the single reason why Vietnam is not yet an emerging market. It is over the somewhat complicated situation determining exactly where foreign investors can invest and how they can invest. Through the new securities law that Federico touched on, we can see that there are still restrictions, and that is Vietnam's entirely sovereign decision. I think the job of investors may wish for greater foreign ownership access, but it's not ours to demand. But the point is that through various structures, there are now plans afoot to tackle this. The key one is, of course, what we refer to as NVDR, non-voting depository receipts. This is a mechanism that's used elsewhere in Southeast Asia, particularly in Malaysia and in Thailand, to create economic certificates which do not have votes but allow investors to participate in the growth of the earnings of companies. And this is now present in both the new Vietnamese enterprise law and the new securities law. So it's a racing bet that this will allow us to see through that emerging market target in the next few years. So I think I'd conclude my remarks there, but just basically going that Vietnam is on the path for an emerging market. It's going to take us a bit of a while to get there, but underlying growth is solid. Companies are improving their performance in terms of governance, transparency, dependability, and investor relations. And so I think there's a strong likelihood of foreign investors returning to Vietnam when they get over their COVID worries, and for perhaps more importantly, a strong continued growth in interest from domestic Vietnamese investors. And I'll conclude my comments there. Hand back to you, Hai, with many thanks to you all.
Thank you, Dominic, for your presentation. And right now, I'll move to the Q&A part, because since we have two important speakers today, we have received on so many questions, and I really hope that you can help us to reply them all. So the first two questions, one is for Dom and one is for Fede. So I'll go for Fede first, which is okay. So if a foreign investor can own more than 49% of the share in a listed company in Vietnam, and the question, yes, please go ahead, Fede.
Should I give you the lawyer's answer? It depends. So, according to the mentioned circular 60, the rate of foreign ownership in a public company is the following. If there is an international agreement of which Vietnam is a signatory, then that international agreement, such as the EU-Vietnam FTA, applies. For instance, the maximum rate of ownership in a Vietnamese bank is 30%, but a European Union investor can own up to 49% in 2 banks of Vietnam, excluding 4 banks that the Vietnamese government still owns. B, if the public company operates in an industry regulated by the law, these laws will trigger. For instance, again, I cannot come up with a better example, but back to the bank's regulations, you can only own up to 30% of a local bank if you're a foreign investor. If the business is conditioned, like we discussed on occasion of the webinar on the law on enterprises and the law on investments, then the maximum rate of foreign ownership should be 49%. And if the public company operates in multiple industries or sectors that have different regulations, then the rate of foreign ownership will not exceed the lowest rate defined in this industry. So if you have a company that is publicly traded, I'm just inventing because I don't know any concrete case in this scenario, but let's imagine that you have a public company that owns a bank and owns something else that doesn't have the threshold. Because the threshold for banks is 30%, then the public company can only be sold up to 30% to the foreign investor. There can be, however, unrestricted investments in securities, unless otherwise prescribed by the issuer's rules and regulations. As long as listed companies report to the SSC. So essentially, the answer is it really depends on the various scenarios. So if you give me if anybody's interested in taking over the majority of shares in a listed company in Vietnam, I can answer the question more precisely. But the answer is in most cases, no, you cannot have the majority of shares, but in several instances, yes, you can.
Yes, thank you, Fede. And the question for Dom is it's not directly related to the argument today, but we found that it's also still very interesting that in the last 18 months, the SPAC company seems gathering a lot of attention from the investor. And for example, in US, it's more or less very focusing on the, let's say, big deal. While in the meanwhile, for the SPAC in Europe, is they're focusing on, let's say, less than 100 million deal. So, do you think that this form of company will be allowed to operate in Vietnamese market in the next 24 months, let's say?
I hope not. Allow me to share that the thought that SPACs, special purpose acquisition companies that you refer to, Hai, are high risk ventures. And I think only people who are very comfortable with the risk profile of SPACs should take part in them. And I would argue that in Vietnam, perhaps there are many better types of instrument that we might develop before we get to SPACs. One of the features of Vietnam, as we know, I think, is that the proportion of daily trading activity, which is occupied by domestic, principally retail investors, is extremely high, about 95%. So from a point of view of market risk and market stability, that's not an ideal situation. And one of the points that we, Dragon, try energetically to promote is the growth of different kinds of investors in the markets. So funds, pension funds, investment companies. Now, that could include your idea of SPACs, but the notion of a SPAC is that a company is listed and raises money before anyone knows what the money will be used for. And that, to me, is a high-risk form of investment. Yes.
Yes, thank you, thank you. We have the next two questions is how to develop an official crowdfunding market in Vietnam. And the second question is, will the change to the law on security boost the growth of fintech in Vietnam? I don't know if...
I think those are both Federico.
I don't know. So crowdfunding is not honestly, I'd rather give you a very honest answer, which is crowdfunding is not something that I really follow anywhere. So I understand that it could be an industry or an instrument, better said, that that works really well in Vietnam, considering how Vietnamese society works. However, I am not entirely familiar with the regulations that govern that. So I'm more than happy to answer this question separately. Allow me to study it. I must admit I was not prepared, but I prefer not to reason with you lively and try and invent something rather than give you wrong information. With regard to fintech, depends what you intend by fintech. If you're referring to cryptocurrencies, meh, not so sure. And it would be a plus for Vietnam. Again, I don't have Dominic's experience, but I would find this industry relatively dangerous for Vietnamese investors. Dominic's slide showed the market from 2016 or something, if I'm not mistaken, Dominic. But I remember that in 2008, 2008, 2009, something like that, people really got burned on the stock exchange in Vietnam because it was a hype. So I hope that this hype is avoided when it comes to cryptocurrencies. In Singapore, where this industry is somehow regulated by the Payment Services Act that we know quite in detail, there are several Vietnamese that invest in this industry according to the applicable regulations in Singapore, and that have launched cryptocurrencies over there. So as long as this is a permitted activity for somebody living in Vietnam and perhaps holding a Vietnamese passport and conducts this activity abroad, that's all right. But I wouldn't venture into this. Other than that, if you define fintech as the application of technology to finance, so perhaps it was on occasion of one of Dominic's seminars, one of Dragon Capital seminars, that somebody said, instead of calling it fintech, we should call it techfin. The application of technologies to financial solutions is indeed welcome, and there are several players in the industry. I don't think that I'm sharing anything confidential in telling you that Grab, for instance, with the use of points per ride, allows you to buy food and other items on its application, and that's a development of fintech. There are various companies, in this case I will not mention the names, that offer payment solutions for salaries, for intra-company payments and stuff like that. It's essentially adopt technologies that facilitate transactions instead of going through the usual procedures. And as long as these procedures are compliant with the law, that's perfectly fine. And there are examples of that.
Yes, thank you, Fede. The next two questions is, the first one referred to Dominic. What is your view on local retail investor inflow? Is it substantial over long term or going to switch fast to assets, for example, from equity market to real estate anytime soon? And the second question is, I believe, to Fede. The new law doesn't provide clear guidance on foreign-owned limit. What is foreign investor view on this issue, or maybe for both? Please.
So the question, thank you, Hai. The question on assessing retail investors. I think globally, the last 12 months have been characterized by this peculiar combination of events. We've all been at home. We've all been bored. The government's lowered interest rates and handed out tons of money. And tech means we don't have to leave our homes to do eKYC. So there has globally been a massive democratization of financial markets. And I think that's a really interesting global trend. And I don't think that's going to stop. I think it's here. And what it will mean is that more people will be investing on their own. It means probably that there'll be more competition. It means that capital will possibly flow around more actively, which might lead to greater volatility. I think all of those are possible. But I don't think it's a trend that's necessarily going to stop. You know, how is Vietnam different to that? Well, Vietnam is the same, but it is also different. It's different in one key respect, is that it's this point number 3 in the presentation slides, which is the growing middle class of Vietnam. And if you look at the development of capital markets anywhere, you see that that people move from savings to investments when GDP per capita reaches a certain level. And that level is debatable, but I think when GDP per capita is somewhere around $7,000 or $8,000 a person a year, then there is a pronounced need for people to invest. It's not that they're speculating, it's that they want to look after their long-term investments. They have a need to invest. And I think if we look at the big urban centers of Vietnam, we're at that level already. So I think this growth in Vietnamese domestic investment is going to continue to grow. I think it's going to be a very strong driver. Yes, yes. Well done.
Thank you, Dom. And the question for Federico. Federico, you have us, please?
Yes, what is the question though?
The question was, the new law doesn't provide clear guidance.
Okay,
for...
yes. And how foreigners perceive this?
Yes, yes.
I think that the problem is not really the perception on these thresholds by foreigners. What I see as a foreigner myself is a more general concern about essentially two aspects. One is taxation, because in various countries, also in the region, such as Hong Kong and Singapore, dividends and capital gains are not taxed, and tax rates in general are quite high in Vietnam if compared to other countries. And evidently, investing in the stock exchange requires a lot of transparency. So the fact that this taxation is high scares off, in my view, several investors. So that is the number one point. Number two is, of course, having to adjust local procedures, bureaucracy, language, and other domestic factors that are not the case essentially in common law jurisdictions. So I'm not an expert in the stock exchange of Tokyo or what is happening at stock exchanges in China and elsewhere. But if you look at the major stock exchanges in the world, they're all in common law jurisdictions. Why? Because essentially there is a culture and the procedures are streamlined and everything works in English. So there are certain stock exchanges that are more focused on certain industries. For instance, the Australian stock exchange could be interesting in certain aspects. But what I'm trying to say is that foreigners are not so familiar with Vietnam in general. So I don't think that the main concern is the definition of foreign-owned companies and what thresholds of investment they could own. It is more, there is a preliminary concern, which is culture, and it is related to taxation.
Yes, thank you, Fede. And the next two questions is the first one from, is there any concern that first-time investor in the Vietnam market may be trading on margin without understanding the risk? And the second one is, do you think that the recent $1 trillion stimulus program of global governments have pushed stock price to overheat or reflecting the intrinsic value?
Maybe I can take those. Yes and yes. It's the short answer, but let me expand. It's a strong tradition in Asia to invest for individual investors to invest using margin, using loans they've obtained from securities companies against their investing. So that's not just a Vietnamese thing at all. But it is really important that all of us, when we invest, have an understanding of what is our risk appetite when we're investing, and in particular when we're investing using borrowed money. So, you know, there's no one risk appetite. There's lots of risks. If you might need your money back by Friday, then you're going to have a different risk appetite to the person who doesn't need their money back for 1 year or 5 years or even longer. And so it's not a question of right or wrong, absolutely not. It's a question of knowing, of aligning one's investment view with one's investment risk. And the second question is related, really. I think it's a really interesting one. I've been working for 35 years in investment, and I've never seen as much money created and thrown around the world as in the last 1 year. And it doesn't matter if you look at the trend in interest rates around the world. Look at the balance sheets of central banks, and of course recently look at the forerunners of inflation. All of these are telling us that enormous amounts of money, of currency, of liquidity have been created, and nobody really knows what the consequence is going to be. I certainly don't. And so I think in regards to the second question of, you know, what are the consequences? None of us know, and all of us should be aware of our own risk appetite. I think that's, I'm sorry to sound like a boring old man, but really in regards to both those questions, risk management, key. Thank you.
Thank you, thank you. I would have the two last questions for you, because it is, the first one is, how is a foreigner resident in Vietnam can buy Vietnamese stock and how capital gain are treated? And the second one is, how this factor into the Ho Chi Minh City effort to become a regional financial center, GVN effort to Vietnam to becoming an emerging versus frontier market. It's not very clear about this one, but yeah.
That's Federico on the first, isn't it?
I guess, yeah. Anyone can invest. Again, it depends on the regulations of the fund. If you're talking about qualified investors that are allowed to invest in closed funds, but the general answer is anyone, even a natural person, because according to the Law on Investments 2020, an individual, a foreign individual, or a foreign legal entity can carry business investment activities in Vietnam. So that is basically it. As for capital gains, so the general rule is anyone can invest. Then how you invest it is a different story, because it depends on the regulations of the fund if you invest in a fund. So there are some instruments that are only accessible to qualified investors. There are industries that are conditioned. And finally, when it comes to capital gains, Vietnam is, it's a long story, but to cut a long story short, the answer is that essentially all that can be defined as income in Vietnam is treated as such. So there is no clear-cut definition of a capital gain in Vietnam, but it is not exempt. So essentially, if you make X from your job as your salary, and then on top of that, you save some money and you invest in the stock exchange in Vietnam and you make Y, you add X to Y, you deduct whatever needs to be deducted, and you pay your taxes here. If international treaties, so like DTAs, double taxation agreements, apply, then of course they apply. But that's the question. That's the answer.
Maybe I can quickly leap in on that second question, Hai, because I think I understood perhaps where it was aimed. So Ho Chi Minh City, as we know, has a plan to evolve as a financial center. So one part of the question is, how is that going? Another part of the question is, to what extent will that evolution as a financial sector help Vietnam become an emerging market rather than a frontier market, as I understood. I hope I've got that right. So
yes,
many of us are big supporters of Ho Chi Minh City becoming a financial center. In fact, in many ways, Ho Chi Minh City is already a financial center. There's a lot of financial activities that occur in this city. And I think the debate is really over how to evolve that and in what direction and at what pace. So, you know, for Ho Chi Minh City to immediately become an international financial center to compete with Hong Kong or Singapore is going to be difficult because we have, and I think Federico has just touched on it, legal system, common law system. Hong Kong and Singapore have common law systems that's different from Vietnam. Language, culture, currency, capital controls, enforcement, etc., etc. So there are many issues that would need to be tackled, quite apart from the you know, the physical aspects, which often some people concentrate only on the physical aspects. It's not the physical aspects, it's more the soft aspects that determine that. Having said that, I think that there's a definite path for Ho Chi Minh City to develop, to become, first of all, a financial center for Vietnam. So to work out what are the financial services that are needed in Vietnam, and to develop those in a way that they're accessible, not just to people in Ho Chi Minh City, but to people throughout the country. And that means technology and knowledge and awareness and education and information. And I think that's a very good path to start on. And I think as soon as we can get that path organized, we could then think about offering certain aspects of financial infrastructure to neighboring countries. There's no reason why Vietnam's capital markets could not offer some form of service to businesses established in Cambodia, in Laos, in other parts of Asia. For sure, I think that's conceivable. So it's there, but I'm not sure that that's going to immediately have an impact on Vietnam moving from frontier market to emerging market per se.
Thank you very much. And well, it has been more than 1 hour since the webinar is started, and we're still receiving many more questions, but we know that both of you are very busy. And first of all, thank you for your time spending with us and sharing your very precious experience and knowledge and view, both from capital point of view and legal point of view to our audience. Thank you very much, much appreciated. And we will collect more questions and to forward them directly to you after the webinar. And if any of you feel free to share or is shareable your file presentation, it's be much appreciated, because we also receive many requests to ask for the presentation file. So also we, as the organizer, we also want to say thank you to the audience and all the participant companies that's joining our webinar today. And very looking forward to meet you in our next webinar. I don't know if Dom and Federico want to share something with the audience before we leave. Thank you.
I just want to say thank you to all of you, to Dominic, to you, Hai, and everyone at ICHAM, the supporting organizations, and more importantly, the audience. And yes, of course, by all means, do share my slides. I hereby give my consent to that. Thank you.
Thanks very much, Hai and Federico, and organizers, and most particularly thank you everybody who's been listening. I wish you all a very successful summer ahead. Thank you very much.
Thank you, John. Thank you. Have a nice day. Bye-bye.